Have you ever wondered why Warren Buffett and many long-term investors love companies that sell everyday products? Today, we're talking about one of the world's strongest dividend stocks, Procter Gamble, also known as P&G, trading on the New York Stock Exchange under the ticker PG. From Tide detergent to Gillette razors, Pampers diapers, Ariel, Head & Shoulders, and many other household brands, chances are you've used a P&G product today without even realizing it. But the big question is P&G stock still worth buying in 2026? Let's dive into the company's latest financial statements and find out. Procter & Gamble is one of the world's largest consumer goods companies. Founded in 1837, the company has over 185 years of business history. It sells products in more than 180 countries and owns dozens of billion-dollar brands. Because people buy these products regardless of the economy, P&G is considered a defensive stock, making it a favorite among long-term investors. Let's start with revenue. For fiscal year 2025, Procter & Gamble generated approximately $84.3 billion in revenue. While this isn't explosive growth, it demonstrates something even more important: consistency. Instead of chasing risky expansion, P&G focuses on steady sales growth, premium pricing, and strong brand loyalty. That creates predictable earnings year after year. Now let's look at profitability. P&G reported approximately $16.1 billion in net income. That's an incredible amount of profit. A high net income means the company keeps a significant portion of its revenue after paying all expenses. This is one reason investors trust P&G during uncertain economic times. One of the most important metrics investors often overlook is operating cash flow. P&G generated around $17.8 billion in operating cash flow. Why does this matter? Because cash flow pays dividends. Cash flow funds share buybacks. Cash flow supports future growth. Many companies report profits, but strong cash flow proves the business is actually generating real cash. Let's talk about earnings. P&G reported diluted EPS of approximately $6.51, core EPS of approximately $6.83. Higher EPS generally means the company is becoming more profitable for shareholders. Steady EPS growth is exactly what long-term investors want to see. This is where P&G truly shines. The company returned nearly $9.9 billion to shareholders through dividends. Even more impressive, P&G has increased its dividend for 69 consecutive years. That makes it a dividend king. Only a small number of companies in the world have achieved this milestone. If your goal is passive income, P&G deserves serious attention. Besides paying dividends, P&G also repurchased approximately $6.5 billion worth of its own shares. Why is this important? When a company buys back its own stock, the total number of shares decreases. That means every remaining shareholder owns a slightly larger percentage of the company. Share buybacks can also increase earnings per share over time. Let's summarize the biggest strengths: powerful global brands, stable consumer demand, strong cash flow, excellent profitability, 69 years of dividend increases, massive global market presence, defensive business model. These qualities make P&G one of the safest blue-chip stocks in the market. Of course, no investment is perfect. P&G also faces several challenges. First, revenue growth is relatively slow. Second, higher raw material costs can reduce profit margins. Third, currency fluctuations affect international sales. Finally, because P&G is already a mature company, investors shouldn't expect explosive growth like a technology stock. So, should you buy P&G stock? If you're looking for quick gains, P&G may not be the best choice. But if you're building long-term wealth, if you want reliable dividends, if you value stability over hype, then Procter & Gamble remains one of the highest quality companies you can own. For dividend investors, retirees, and long-term portfolios, P&G continues to be an excellent investment candidate. What do you think? Would you buy P&G stock at today's price? Let me know in the comments below. If you enjoyed this financial analysis, don't forget to like, subscribe, and turn on the notification bell so you never miss our next stock breakdown. Thanks for watching, and I'll see you in the next video.